All right, so what we're going to do is start focusing a little bit more on turning points, how they occur, and really have a mastery of that subject. So, and I'll show how to trade that. I know how to do that, and I'll kind of cover what were the turning points, how did they occur. So if you're, for example, a lot of the forex traders, they say, okay, take this zone and find a koch or something like that. What was it? Change of character. I call it change of behavior. Others may call it something else, a trend change or something, but whatever. I'm going to explain, all of that. And let's start off with, first is basically when you're trading, right? In your mind, you need to have a level, and you need to have a signal, and you need to have a trigger. All right, so you need to know where to buy, what to look for, and have an execution process when your trigger occurs. So as far as levels are concerned, these are the same as points of interest, and this is one of the first things you want to identify. So some will use support, resistance, extreme highs and lows. Some will look for daily highs and lows. That's where they want to trade, or weekly highs and lows, or springs and up thrusts. Whatever the case is, the key is it has to be on a higher time frame. Again, the key is it has to be on a higher time frame. Why? Because that's where the money is. All right, it cannot be on a lower entry time frame, like 5 minute, 15 minute, all of that. It will not work. Those are entry time frames. They don't work for levels and where big money has established positions. That's the point. So anyway, so let's take a look at that. What I have at the top is a bunch of charts, but I'm going to be explaining this. All right. So right here at the top is the, let's put this down a little bit, is the Renko. And what the Renko is used is for identifying good levels to trade. Again, it's used for identifying levels. Why? Because it has a volume print in it. Because it has a volume print in it, it can tell you where the positions are established, because this is how you identify the footprint of this composite man is based on volume, right? And I'll give you an example. This entire turnaround that went up, the entire turnaround that went up in this market, was this gold? Where is the footprint of this composite man that turned the entire market from down to up? Let me just show you. It's right here at the low. This volume here is the biggest volume in 17 bricks. Did it have follow through, or did it go the other way? It went the other way, meaning this is climactic stopping action, also known as effort. It could also be effort to go down, goes the other way. So this is the composite man footprint of accumulation right here. How do you know it goes down and then it goes up? It does not have follow through, right? So this is where the, and then it went up here. So now we're going to take a look at, there's actually some pressure over here too. I don't know what this is. Maybe they're trying to break out. I don't know. I'll take a look at it. Something's going on here. In any case, where is the zone to buy the pullback? The pullback zone is from 49 to 60. What do you want to see when price goes into that zone? Well, it's basically the same thing. You want to see a transfer. A transfer of what? Transfer of contracts, transfer of stocks, transfer of assets. And basically you want to see accumulation. Okay? So that that happens when one side panic sells, right? So you want to see that high volume, right? That accumulation. So that's what I would look for. But before I go there, and I mean, obviously I'm not going to wait until it's all the way here, right? So let's take a look at one that occurred. And that happened right here, this turning point right there, and see how it occurred. Okay? So as the market pulled back here, what do you get? Oh shit. I hope I didn't mess anything up. Anyway, the market pulled back into that area, and it became oversold, where it says OS means oversold. And then you had the biggest price wave in 28 waves, followed by the biggest volume in 37 waves on that wave. So they were buying when price went into that quote unquote level or zone. Accumulation occurred as indicated by the heavy price volume action on the way up as well as on the way down, indicating climactic action leading to oversold condition, leading to more accumulation on the wave up. How do you know? Biggest price volume in 28 and 37 waves. So obviously that's what it is. If you go to the point figure, you will see, bam, right here, the selling, right there, right? That's selling, and it looks like a breakout, but it's actually climactic volume on the way down, sideways, makes a little base up here, and then breaks out, telling you it's going higher. Okay, so you want to see when you're in that white zone or, you know, heavy volumes or some type of transfer. So you have the climax, shit in the middle, a base across these lows, and a high. Oh, let me refresh. Don't mess anything up. That's the problem with indicators. You always mess something up. Anyway, so that's the low, and then once that happens, all you do is you just take a count. So you take a count here. That's 15, and it blew through that count. About here, right? About 15, 16, whatever this is. Targeted here. Then this is where the market climaxed. Actually climaxed here as well. But how you know is when the low gets taken out, because that's stuck volume, right? So you know, okay, yeah, that's climactic and it's stuck, and you know, it's like the opposite of panic selling is what? Panic selling, climactic, you know what they call climactic on the way down. The opposite of that is FOMO buying. That creates the buying climax. All right, so this here is a buying climax and confirmed when its low is broken. When its low is broken, you know that volume is trapped. See that? It's trapped. So then, you know, you can take a trade, but you don't really know how long how much lower it's going to go, because there's no base here, right? So it's just when that happens, I get confused, because it can just be a pullback to test support, and then it's going to go back up, and I think that's what happened here. All right, now again, it's back into that same level, and you have this selling, right? So someone's selling up here. I mean, these numbers are not small numbers, folks. 100, biggest in 100. This is not random. This is, what do you call that? This is the footprint of the CM. They're selling this high. They sold up here, and in the climax, they established a position, sold some. Then when it came here, they sell some more. So your climax, and that's your change of behavior, and this is probably your breakout. So this thing is going down. You know, it has the makings now for a move lower. Now it's just a matter of doing the count and figuring out how low it's going to go. But I mean, you don't have to be a genius to figure out that it's going to go right here in the 50 to 60 area. So what does this mean? When it goes to the 50 to 60 area, right here, you look for trades. And believe me, just like here, you have your change of behavior, and you have your climax right up there. You see, it's very clear. Climax, then break. Okay, trapped. The same thing's going to happen here. Because one side has to overpower the other, and that requires volume. So as it comes to this demand zone between 50 and 60, we'll be looking for the turn. All right. Now, if it doesn't come, it can break right through. But if it's there, excuse me, if it's there, then the trade is. It basically means one side panic sold, and the other guys got it. And now, obviously, if they're going to buy that much quantity, they have an interest in it going up. They won't buy without it going higher. And if they have enough buying power to turn the market, they have enough buying power to continue it up. All right, so this 8 right here that you're seeing up there with the 13 and the 8, this is all this shit right here, right? So you have this selling, and then they have a break. So very, very likely it's going to take out this low, and it's going to come back into this area here. Very, very likely. All right, so in fact, I might even just take the trade here. You have your up thrust, you have the selling. See another up thrust. See, this is really nice. Look at that. See that? When it pulls back, takes out this area, then goes down. It's real nice. So I have a high degree. The only thing that should stop you from taking it is that it's counter trend. So it's going to be a pullback to support, and that's where you want to buy, not counter trend. But if you're one of the traders that takes both sides of the market, this is perfectly fine. You have all of that. You have selling in the background right here, right? This was selling in the background, up thrust after distribution. This situation had up thrust after distribution, and now you have markdown. Markdown to where? In this area. What happens? We don't know, but we do know what to look for, and that's Wyckoff style climaxes and all of that. All right, let's go to the next market. So before I go, gold between 1950 and 60, pull back into that area, and I just want to see something here. Now it's a pretty big count. 1, 2, 3, 4, 5, 6, 7, 8. 4, 5, 6, 7, 8. That target's reached. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 13, 14, 15. 9, 10, 11, 12, 13, 14, 15. Yeah. Yeah, I don't know. I mean, if you can take the cause off of this area here, we have all the way to 31, right? So that effect is pretty deep. Actually, it's all the way, it's basically at the bottom of the supply area. So I don't think it's going to go there, but it can. There's enough cause for it. If we just take a here, from here to here, which is what I was thinking originally, then its effect is right into that 1960, around that 960, right above the demand area. So we'll see how it reacts there. All right, we're done with gold. Let's move on to the next one. All right, so crude, we'll take a look at how this turn up here occurred, right here. How did that occur? So market pulled back, went up. This volume got trapped up here and it sold. One of the things you want is trapped volume because it increases the probability that your trade will work. Again, it increases the probability that your trade will work when there is trapped volume. So always be, see over here where it's that 20, right? And you see the low, it gets taken out. By what? A change of behavior. On how much volume? The fucking biggest volume in 100 columns, 100 bars. Trap volume plus change of behavior. I mean, what do you think? It's going to go up? No. It does test and then it pukes. All right, so there's more and more selling here. More and more, a little bit of buying, but I think it's bullshit. All right, it's probably just some covering. All right, so there is a daily demand at 68.53, so we want to be careful of that area, but that's the situation. What are we looking for? Reversal back up where? Between 72.50 and 73.55. All right, done. Any trades right now? Nope. All I'm saying is that when it gets back up in there, there's an opportunity. And how this occurred, how this down move occurred was this is what I'm looking for. That change after some trap volume is good. All right. Was it up here? I mean, it's visible up here as well. It just went up and then I have to refresh. Now display. But here's the selling and the more selling and then the puke fest. Okay. All right, so I'm done with this. I'll move on to the ES. All right, so ES, we're looking at 41.46 to 41.70. Not going to trade anything until it gets into that area. Might not even get into that area. You know why? Because this volume here is holding it. This 13 is holding it, so may not go there, which is fine. If it doesn't go, it doesn't go. Who cares? There's plenty of other opportunities on gold. So anyway, so let's analyze. I don't really see a climactic action here, so I wouldn't be surprised if it goes lower. But this thing right here is holding because of that left-hand side, that 13 right there, that big volume right there that's what's holding. That's what caused the bounce here. But eventually, if it doesn't go higher, it's going to break that low and go lower into this area there. And I had a count all the way down here to around 41.68, well, basically 41.70, right? Because it's 24, so around there. So we'll see if it goes there. What I want to do is see how this turning point occurred at the top, how the top occurred. You will see it's going up, 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 up. Oh, look at that. All right, so there's a lot of, not really a lot of volume, but it spikes up on a big bar. That bar is the biggest in 35 up bars. So sometimes you'll get an overbought and oversold condition as a result of a big move in price at the top or the bottom of a trend. That also is similar to a climax, but it's just that it overshot. So it's like a hypodermic maneuver. Typically it has a lot of volume, but it doesn't need to have the most amount of volume in the way a buying or selling climax does. But it's also just as good. It's just the market goes up and overshoots. This is that case where you see that this is the biggest bar since these lows. That right there is the biggest bar since those lows. After that, it moves, makes a little base, and then red on red and red, break, break, break. All right, now we want to see how this thing is handled. So this was your change of behavior. This your market is in an overbought position, and then you had your change of behaviors, and it basically broke. They're not as as high as I would want them to be in terms of, I want the hundreds, you know, the overwhelming climactic move. But sometimes you're not gonna get them, but it'll still show up. And let's see how it looked on the basically created a big range of shit of distribution across this area, and then gave some false signals, and then now we're at this point. I have to refresh. So it would do nothing until it comes back down and gives the opportunity, and it should. All right, that's all, folks. Take care. Bye.